Hey everyone, welcome back. I'm Jeremy Szafron. All right, now there are moments when the market narrative shifts so fast that you can almost feel it, and we're in one of those moments right now. For the past year, the story has been simple: gold at all-time highs. But another real story, the one that's just beginning to unfold, is happening in the equities. After years of being ignored, the miners are waking up and finally catching a bid. And at gold over $3,500, these companies are set to become cash printing machines. Their stocks are coming to life, and the question on every investor's mind is no longer if the sector will run, but how far. Is this a short-term rally? Is it a start of a generational re-rating? How do you separate the winners from the pretenders? Now, to answer those questions, we're launching a new series today here at Kitco News called Legends, and that's where we're cutting through the daily noise to get timeless wisdom from the icons who have navigated these markets and built empires through the chaos. Now, our guest today is a legend in the truest sense. He's a geologist by training who has founded and built 5 separate public companies into billion-dollar-plus enterprises, a feat few in any industry have ever really matched. And he's also the man behind Pan American Silver, one of the world's largest silver producers, and the chairman of Equinox Gold, a company now worth billions of dollars. And in a league of his own, he has given millions to causes like environmental conservation, something very close to his heart. Now he's here today not just to talk about the markets, but to deconstruct the principles of leadership and investment and what made him a legend. Even though I know you're a humble man, joining me right now, Ross Beaty. Thanks for making the time, Ross. I hope you've had a great summer.
What a preamble. What a preamble. the Equinox, tens of billions of dollars, by the way, those are Zimbabwe dollars, not
those
the
are
big,
Zimbabwe
not
dollars.
The big US dollar, not even the Canadian dollar. But anyway, it's wouldn't it be nice?
Well, we're getting there. We're getting there, especially with some of these deals. And, you know, the market is back. I mean, the GDX is up something like 90% year to date. The market seems euphoric. But from your perspective, I mean, is this the start of a durable long-term re-rating for the sector, or does it kind of the euphoria feel a little fragile?
It's pretty euphoric, but you know, I have seen these markets before, and it really is a secular breakout. I think, you know, we saw this. Oh my goodness, we saw it like in 1992. We saw it in 2002. We saw it in 2009. You know, where you had these fabulous moves, and I've talked about this before with you. And I've advised investors, you know, especially the last few years have been so brutal for equity investors because you've had a wonderful move in the gold price and other metals like copper and most metals on the periodic table. But the equities haven't moved. Money's come out of the system. It's gone into other flavors of the month, Bitcoin, meme stocks, and lots of the, you know, the Nifty 50 in the big stocks in New York, the fabulous 5, as they say, you know, all these other things that have done really well at the expense of the mining stock. So there's been no money coming into the equities. And I just said, look, there's 2 things are going to happen. Either gold price is going to crater, in which case fine, equities valuation, which you know has basically reflected a terrible metals price environment. That's either going to happen. I find that extremely unlikely, or you're going to have the equities pop up to where they should be based on the metal prices. And in fact, the latter has occurred. And then the other thing I said is to investors, when this happens, which sort of happens overnight, and we literally have just seen it happen in the last couple of months. Yeah. When it happens, do not sell. Resist the temptation to sell. Obviously, take money off the table if you can, get your capital back, but go in for the ride. This is likely to be a relatively long-term market move, because it's been pent up for so long, for so many years, where the equities, and I follow the golds more than anything else because that's my sort of main gig right now, Equinox Gold. So I follow that, and I've just seen this really incredible explosive rally, as you said, in the large caps, the mid caps, and particularly the juniors who have been so unloved for so long. Yeah. It's lovely to see, but my advice is this is likely to last for a while. Don't sell everything. Don't treat it as a trading opportunity.
Yeah, not just profit taking. I mean, you see some of that. I mean, it almost feels like the narrative has changed for the miners too, right? I mean, now everyone's looking at these costs, and the bull case is kind of simple. I mean, these companies should be gushing with cash, but the reality is that their costs have also exploded. I mean, for anyone running any kind of business right now, that is a core challenge. From your perspective, what's the key to protecting, you know, profit margins in this intensely inflationary environment?
Yeah, I mean, it's first of all, it's not intensely inflationary. It's somewhat inflationary. It was a lot more inflationary back in 2022, 21. which was a COVID reaction to just outpouring of vast amounts of money hitting the system and people buying stuff and inflation going crazy. It's not crazy. It's modest. Costs are rising for sure, but they're not rising nearly as quickly as the metal prices rising. So margins are actually expanding. Companies are gushing money. Anybody in the gold space right now is doing really, really well. And if they're not, they shouldn't be in the business.
Yeah. Well, I was going to say, let's talk about the disconnect between the majors and the juniors. It feels like two very different worlds. Do the majors, with their massive operations, have an advantage in this environment, or does the real opportunity for wealth creation now lie with these smaller, more agile companies?
Well, I've always believed that scale matters. That's one of the reasons with Equinox, for example, we went big really quickly in the last 7 years, building a company from nothing to now almost just nudging 1 million ounces of gold production a year. And I did that because I wanted to take advantage of what I thought was going to be a really good move in gold, where the larger you are, the more profit you can make from this big move in gold. But also, the market today reflects a desire for scale. Investors want large companies that are highly liquid, that have good balance sheets, diversified assets, that kind of thing. And so that's why the majors, the large cap stocks, have typically outperformed the juniors. That's been the narrative for the last number of years. Mm-hmm. And it's a normal narrative in a kind of evolving bull market in gold equities. But of course, as the market cycles, the large cap valuations, which outperform in the start of the cycle, they tend to underperform as markets go down. People tend to take profits. They roll those profits back in the market, and they go to the mid caps, and then they go finally to the juniors. And that's what's happening right now. Majors have done well. Barrick's had a really nice move. Some investors are taking some money out of those safe, diversified, lower risk companies that have great multiples, and they're putting it into the smaller companies that don't have the multiples but have the upside. So I think that's really what's going on finally after years and years of those stocks underperforming.
Okay, so the M&A side, I mean, is this finally, the juniors cycle, or will the majors just buy them out and capture that upside for themselves?
Yeah, I mean, not really. I don't really see a lot of M&A happening. There will be some, Jeremy. It's a business which needs M&A because, of course, every day large companies can only replace reserves that they mine by either new discoveries or buying companies that have gold assets. So it's just a natural part of the mining and, quite frankly, any resource business where you're dealing with a non-renewable resource. Mm-hmm. Is it going to change right now? I don't think so. A lot of the major companies that are gushing cash are actually returning that to their shareholders through share buybacks and dividends and that kind of thing. Or companies like Equinox that, to build its business as a big company, had to borrow a lot of money. We've got $1 billion and change in debt, and we're using our cash flow right now to repay debt, to delever, and that's the main use of capital that we have right now. Are they going to buy a lot of the juniors? I don't think so. Some will be sold, of course. The higher quality juniors will always command a value. I don't necessarily think that the pace of acquisitions is going to increase all that much. We'll see. Yeah. I just think valuations are going to where they are kind of more natural, should have been for the last few years, and are now getting to be reasonably priced relative to the gold price we see. The actual fundamental net asset value of those junior companies.
Yeah, I mean, we hear about it. We've seen some of the majors been terrible capital allocators in the past cycles, and people have asked us, I mean, what makes you think that they've learned their lesson and won't squander this opportunity on overpriced, ill-timed acquisitions at the top of the market?
Yeah. Well, it's very tempting when you've got a whole bucket of cash you don't have a particular use for it to not to resist the sort of the shareholder wish to return it to them, and to actually use it to build the egos of the managers to get bigger and bigger and buy other companies. It's very addictive to be doing this. I mean, I've done tons and tons of deals in my career. I mean, it's a sort of a, I don't know if it's like long distance running, it gives you that kind of high, but doing these deals is really fun, and it's exciting, and it's what naturally drives managers. And of course, the bankers and the investment dealers are all over this stuff because they make fees from M&A. They make fees from recommending deals to managers of companies, and they make it all look so great. When they show you the PowerPoints of combining 1 and 1 is 3, and using your high multiple to buy a low multiple company and so on. Well, they don't always work out, and as you correctly pointed out, there's been a lot of shareholder wealth destruction through bad deals, and I must admit I'm guilty of 1 or 2 of those myself. So it's definitely a tempting thing to do. compared to a rather more pedestrian thing of simply paying a big special dividend if you're making unusual amounts of cash or buying back shares.
Right. Yeah. I mean, that's some of the hard math of mining, of course. But investors also need to understand the human factor, the leaders who drive these companies. I mean, you've been doing this for over 40 years. I mean, when you look back, what's the one thing that has become more important in your decision-making process over time? And what's something you've learned is actually less important than you once thought?
Well, lessons.
Welcome
from
to 60 Minutes. Yeah.
I know. I don't know, Jeremy. It's such a risky business. I've just learned the power of diversification, I think, as much as anything. The reason to go big is to build an asset base that's resilient against some of the risks that come into the mining business. And I'll just name a couple. Last year, for example, we had a pit wall failure in one of our 7 mines. It was a mine in Brazil, and if we were a one asset company only holding that asset, our stock price would have been crushed potentially to an unrecoverable point. As it was, we had 1 of 7, and we took a bit of a hit. It took about 4 months to recover from that. The mine's back running, and it recovered relatively quickly. But that was a surprising thing of it. It happens in the industry. We've had a very slow startup at our big new mine in Canada called Greenstone. Again, that would have hurt an awful lot of companies, but we've got all this other gold production that buffers that slow startup. It's doing fine now, but it did take quite a while to start up. And then in Mexico, we've had a community problem that's been intractable, and we've had to shut a mine down there, a big mine, with giant resources that I just think is a world-class deposit. But we've had these social problems, so we had to shut the mine down. And again, if we were only holding that one asset, we'd have our valuation would have gone to zero. So that's been a big thing for me, is the power of diversification. But you can only play that game if you're really in the mining business with a desire to build something of a real scale, as opposed to something that someone else is just going to be able to buy out, or make a discovery that as an exploration stock that a bigger company is going to like and want to just buy out. They're very different strategies, but the one that's worked for me is in this current company, at least in Equinox, has been to go big, be diversified, resilient, and today we're getting a tremendous amount of value for that strategy finally after years of underperformance. Yeah, well said. And, speaking of legends, we had Tom Kaplan, somebody that I know you know quite well, come on the show, and he was talking about how jurisdictional risk has really taken over what he looks at in terms of importance for some of these plays. In a world where the strategic metals are now, a thing in the White House, everyone's kind of this rush. How important is the jurisdiction? Yeah, I know. Well, first of all, Tom is just an incredible guy. He's a brilliant man, one of my best friends. I just think the world of him. He's in a slightly different part of the business than I am. He's more on the exploration side, and I'm more on the mining side, I'd say, right now. I mean, I've got some exploration stuff, but mostly mining. And I've also had great success in some places that were kind of hands-off jurisdiction-wise for a long time. Peru, for example, was a pariah, an investment pariah for years until 1992, when a new president took over. Clean House made it one of the world's best mining jurisdiction, which it still is today. That was in 1992, and it turned around in 93, 94. We got in there in 95, and it's just been a wonderful place. Bolivia looked horrible for 160 years. It had 180 government changes in the first 160 years of its existence. Since we started a mine in Bolivia in 1998, I think it was, it's been actually the most stable jurisdiction for the company, the best, a place to be able to extract dividends from our mine value. The mining has been really hassle-free. It's been a huge surprise to anybody who would have said it was a basket case. So you can't be too clever. You can't be too careful about picking jurisdiction. I tend to take a diversified approach. Pan American's in 6 countries, I think. Equinox is in 5 countries. If one goes south one day, another one might go north. These countries change quite quickly. And by the way, Canada and the US, which are countries traditionally thought of as very safe, or Australia, they've had disastrous governments in the past who have proposed absolutely, absolutely dreadful tax and royalty changes that would have wiped out the industry in the last 20 years. So you kind of have to be careful. Trump is doing great things, I think, for mining permitting and so forth in the U.S. Biden not so, and the EPA under Biden was a very strict organization, which made it very, very hard to get permits in the U.S. That's turned on its side. So
Right.
so you can't be. I don't think you can be too clever. You have to kind of hold your nose sometimes. Go in, cross your fingers. But I've also been burned. I was burned in Russia. I've been burned in Argentina. I've been burned in Guatemala. There's places that have really been hard, and that's the cost of taking that approach.
Yeah, makes sense. Before I was going to move on to one of these announcements, but before we do that, I mean, you brought up U.S. and obviously they're fast tracking. You and I talked about this briefly, but we got a new government in Canada. I mean, have you seen? Is it all just talk? Is Canada open for business? Has that been moving along quicker?
Yeah, no, it is open for business. Canada's open for business. Ontario is, Quebec is, BC is. Like, Canada is a good place to be in right now. Right today. The provinces are supporting mining, and they actually have the main jurisdiction, by the way, in all the provinces over regulating mining. The feds have jurisdiction up in the territories. But yeah, it's a good mood right now. There's a lot of interest in critical minerals. Most of them aren't very critical, by the way, but there's a lot of interest in developing these. And so it's the mining industry right now has its day in the sun, and long live it. But, typically it doesn't last forever. It'll change.
What do you think about these critical, I mean, you've been doing this a long time, these new critical minerals, these new critical metals. I mean, they're talking about copper, silver, silicon, even potash being added.
Yeah, I mean, I've got this is rant number 32 because I've got lots of opinions on this stuff. I kind of laugh at it. Most of these things are propagated by economists and politicians who have no clue. They know all about the demand side. That's fine. They understand demand's going up. Renewable energy and electrification of the world is going to support critical minerals, and of course, China dominates in this area, has dominated for a long time. And they worry about that, so they all want to support this business, but they don't have a clue about the supply side. The bottom line, in the rest of the world, there's lots and lots of supply of minerals. What there is not is a supply of metals. In other words, refined product. That's where China dominates. In aluminum, in manganese, magnesium, cobalt, lithium, you name it. Even copper, zinc, like everything. They've built this gigantic smelting and refining business using their cheap electricity, which largely comes from coal mining or has traditionally, now much more renewable energy based. But they've built this big business. They've taken advantage of the low cost of labor and low cost of energy, and have gone crazy on developing the smelting and refining business. So that's what the West needs to have if they really want to compete. But they can't compete with China on costs. It's going to cost more. We're going to see inflation if we put tariff barriers up to Chinese metals. You're just going to have higher prices for all metals. That's me. If that's what politicians want, that's what they're going to get. All we have to do is build more smelters. It's a very, by the way, hard thing to do, and it takes many, many years. Yeah. So you're not going to see anything change overnight. These are big polluting factories typically that take a lot of electricity. They aren't things that most people want in their own backyard. So they're going to be social problems. You're going to have environmental issues to overcome. It's very easy to snap your finger and say, we need more critical minerals, but it's a very difficult thing to actually make it happen.
Yeah. Good. Well said, Ross. It'll be interesting to kind of see if this is all just talk. And I mean, if we make this tangible for our audience, I mean, news broke just, I think, this week that you and Eric Sprott made a significant multi-million-dollar investment in a little junior explorer called Scorpio Gold, operating down in Nevada. But let's use it as a real-time kind of teaching moment. I mean, was there a specific human element, a conversation, a character trait? I mean, what told you that's a team worth backing? How do you kind of assess that?
Right. Well, first of all, Jeremy, I'm really not an investor per se. I've always, my whole career, I've been a developer. I've been developing companies. I'm an entrepreneur, startup guy. I've made most of my money building companies, and it's been my own companies that I've always focused on. I don't sell them typically. I at least I don't sell shares in them. I create them, build them up, sell the whole company, one exit to a buyer, or I build operating businesses that I can just retire from. and maintain themselves like it did with Pan American and, for example, my renewable energy company, Altera Power. So I'm not really a classic investor the way the average retail or institutional investor is. I do invest now and then, and I'm generally not investing these days. I've said no again and again and again because I'm actually kind of on the exit plan right now. I'm not really doing any new startups. I'm not doing any new companies. I've got a couple in my fold that I'm trying to have a happy ending from. But that Scorpio was a really exceptional story, not even having to do with the asset. The fact is that Leo Hathaway, a geologist that's worked with me in my Lumina group since 2003, I think. He's been with me for 22, 23 years. He joined the board. He really likes it. He recommended it to me, and I just took his recommendation. The other members of the Lumina group have invested as well. It really doesn't speak to anything particularly clever about an analysis of the gold deposit at their property. I've never been to the property. I love Nevada. Nevada's been great for me. It's a wonderful. It's probably the best. I mean, it really has been the most successful gold mining jurisdiction and gold discovery jurisdiction in the world for the last 40 years. More gold there. It's just swimming in gold. It's just incredible. So it's a great place to look. Maybe they'll have great success. It's a very small company. And maybe they won't. There's a lot of risk in all these things. Again, I take a diversified approach. As if I am an investor, I buy a whole pile of things, a basket of companies, because any one of these companies can have a failed set of drill holes, and that's life. You as long as the management do what they say they're going to do and drill holes in the places they say they're going to, and execute the business plan, I'll be happy to give them money again. It's when they take money and do it something else with it that I would never support again, and that has happened a number of times. So anyway, we'll see. But that's the Scorpio story. Not very exciting.
Well said. I mean, because I was going to ask you. I mean, everybody knows that some of the juniors before, what's happened in those cyclical times. But what's a subtle red flag you see in a leader that makes you walk away, even if the asset looks world class?
Yeah, for sure. I mean, you need to have, when I look at something, I do start with the asset. The asset is fundamental. Even a genius can't make a crappy asset into a good investment. Even a fool can drill a great hole and make a good asset, valuable. So it's the asset first and foremost. But behind that, you also have to look at the people. People are really important. You have people who have a history of malfeasance, for example, diverting money or not spending money on what they promised they would. People who are serially operating these sort of pump and dump schemes where you can see the value of the stock go up, then they sell, and the stock gets crushed. It's common in Vancouver to have that experience. It's not hard to sort of identify people like that. You have to do some work, go to investment conferences, listen to Kitco, for example, and try to separate the wheat from the chaff. And you can't be a good investor overnight. You've got to work at it and use good brokers and good advisors and read the newsletters and read investor reports from the brokerage firms. There's good analysts and there's crappy analysts. It's like everything. There's some people I really admire and some people I don't. That's the way of the world. But people are really important.
Has your appetite for that kind of risk changed as you've gotten older? I mean, how has your personal risk tolerance evolved?
I would say much. I would say what I look for now is a well-structured company, and I won't say Scorpio is one of those, by the way. It's got way too much stock out, and they've issued too much stock, so that's a criticism of that particular management team. But I hold my nose because the geologist that I know and love is supporting it. So you look at the structure of the company, indebtedness, the record of financings, the integrity of the management structure in terms of how they're spending money, where it's going. Has that changed over time? It probably has. I must admit I can see through a company pretty quickly now, whereas it took me a while to kind of understand the game when I was starting out. At the end of the day, though, as I said, it's a very risky business, and you really have to understand that you can lose all your money, and not get into it unless you're prepared to handle that. And the other thing, I guess, just thinking about this, Jeremy, is the reality that we live in a cyclical world, right? This mining game, equity investing in the mining game, is highly cyclical. You have these wonderful runs like we're experiencing right now. And by the same token, you have these horrible long bear markets that just feed on themselves, and the whole market gets lower and lower and lower. The tide goes out. All companies are left high and dry, and it can be out for years. It can be out for, 4 or 5 years sometimes. So you just, and in a market where everything's, the tide's going out, the bear market, it doesn't matter what kind of clever management exists. You're probably going to lose money if you're invested in the game. On the contrary, if the market's good, like right now, everything's going up. You're seeing that today. Every single thing is green on the screen, and it's just a market that even an idiot can make money at.
Yeah, silver's catching a big bid here, $42. I think we got $35.70 at the time of taping this on the gold front. I mean, are you looking at just kind of everything? I talked to a broker yesterday. He said now's the time to just go and pick it all up.
Well,
not as much.
Reflect on that kind of comment. I mean,
exactly.
Look, brokers have the attention span of a gnat. They're very short-term focused. I've always tried to build companies that are longer-term focused and really try to take advantage of these big cyclical swings in metal prices. I did that with silver, for example, starting Pan American when silver was at the bottom. I did it with the copper companies, the Lumina Copper Group, and Equinox Gold. We began Equinox Gold at the end of 2017 when gold was $1,350. I was pretty sure gold was going to go up, and in the process, the bigger the company you can build, the more leverage you're going to have to that higher price. Well, I was pretty sure it was going to blow through $2,000, and I said that year after year after year, but it never actually did that until last year. And boy, what a run it's had. I mean, I never expected this kind of a run, but I'm really happy that in the meantime, we built this company that's really hitting its stride right now and is really going to take advantage of this great gold price by churning out massive amounts of cash and just being a super solid company. So I take a much longer term view than most people. But at the end of the day, Jeremy, things could turn tomorrow. I mean, gold is a wild animal, for example. It's very hard to predict. You could take 50 analysts in the world of mining analytical companies, and they're all going to be bullish on gold right now. It's very hard to create a bearish sentiment. But of course, to the contrarian, that's the best sell signal you can possibly have, that everybody's bullish on an upward gold price. I must admit, I tend to side with the analysts. I do think it's very, very hard to create a bearish scenario for gold right now. So I do see gold maintaining its price, bouncing around where it is today, potentially going higher. Really, its day in the sun is happening right now. Yeah. Silver's a different story. Silver, of course, as well as anyone, it's a schizophrenic metal. It's both precious and it's industrial. And if we have an economic turndown due to higher inflation, higher rates, whatever causes the major market equities to have a downturn, or even the economy generally to be in a downturn, which could happen tomorrow. It could happen. Yeah, you're going to see silver hurt. Maybe not as much as, say, copper or nickel or zinc, but it's going to be hurt. On the other hand, if you have a synchronized economic growth with a good market for gold, you're going to see silver outperform gold. And that's just the way silver works, has worked for, the 40 years I've looked at it closely.
Yeah, and it continues too. I mean, here today, just watching it, you were talking about the contrarian side and the cyclical approach on this industry. I mean, our viewers are constantly bombarded with financial advice, as you can imagine. What's a common piece of advice, investment wisdom, not even advice, that you believe is actually dangerous? What's a smarter way for them to think about it?
It's really hard. It's really hard to give any kind of wisdom on that, Jeremy. I think one thing I do is I try to read what other smart people are doing. John Paulson's bullish on gold. He's a smart guy. Ray Dalio, super smart, very bullish on gold and very bearish on things like the U.S. economy and bonds. Those are smart people, way smarter than me. I'm not an economist. I don't know beans about, investment theory at all. I'm a geologist. I'm a rock basher. I mean, that's where that's been my career. But I read these smart guys, and they all put pretty compelling cases. So I would say that's a good place to start, is to look at smart people, what they're saying, and kind of follow their advice. They build billion-dollar businesses by being smart, not stupid.
Yeah, well said. And so taking it back to mining, what you do best in those rocks, I mean, looking out 10, maybe 20 years, what do you think will be the single biggest disruption in the mining industry? I mean, will it be AI, automation, maybe a revolution in industry, something else entirely?
I don't know. I mean, I do know a couple things. That as the metal prices go up, there's a lot of resources in the world. There's a lot of copper. There's a lot of nickel. There's not a shortage of metal. There's lots and lots of metal. It's going to need higher prices to be economic. But take copper, for example. Every country in the world right now is trying to promote its own country's potential for copper mining, because copper creates a lot of jobs and it's a very big long-term wealth creator for any country. Canada's doing it. The United States is doing it. Everybody's doing it. And there's copper everywhere. So, as the copper price rises, to make mines more profitable, you're going to see new mines opening up all over the place in say 5 years, 7 years. And that is a natural break on higher prices. So higher prices, the cure for higher prices is higher prices. And it's the same with gold. You're going to see a gush of new gold mines opening up in the next few years because of high gold prices right now. And that'll eventually put a lid on the gold price. It always has, it always will. So we always have to keep that in mind as an investor. That kind of a timeline is important, because there will be a market correction to the price eventually. And you look at something like lithium. Lithium had this run. Well, there's so much lithium in the world. There's lithium everywhere. There's no shortage of lithium. We're never going to run out of lithium. And that, of course, has served as a big break on the price. That's why lithium prices haven't continued to go up, even though demand's gone up and up and up every year. So each metal's a little different in its demand and supply. Right. You have to understand that. You have to think about not what's happening today, but what's going to happen like in 5 years, and try to be ahead of that if you're an investor.
Hey, have you ever, I was going to ask you about self-reflection. I know that you're good at it. Have you ever looked back in your career and wanted to do something differently? Was there a specific deal you passed on that maybe became a huge success? Any lessons about your own biases?
Lots of them. No, I think it's inevitable. You can't win them all. I've had a lot more wins than losses. I haven't lost very many times. I've had many, many wins. I think I've started 16 companies now and sold, 12 of them, and 3 of them have become really big companies that I've just retired from. And so I've had a lot of success, a lot of luck. I always blame luck as the big reason I've been so successful, because I've just been a very lucky guy, with all manner of things, by the way. And so, I don't know how much, it's very hard for me to be a kind of a pundit, Jeremy, on how someone else should behave. I just put my head down and I try not to listen to too many people. I do read a lot and I travel a lot. I try to understand history, geography. All of this informs my own thesis of what to build, when to build it, who to build it with, how to strategize the growth. It's very hard to be. It's actually, because I've never really written a book about it or anything else. Right. I've never really thought about it much. I just put my head down and have done it.
It's that humbleness. It's that humbleness I was talking about, Ross. Okay, well, listen, outside of your family in the world of business, what are you most curious about right now? Is there that book or an idea or a subject that recently kind of captured?
Books are a lot of work. COVID, it's weird. This is kind of personal, but COVID really, because I was forced to be on my little island near Vancouver, Bowen Island, it got me into gardening in a big way. It's shocking to, here I've been a guy who's been traveling all my life, just an obsessive, compulsive traveler. It doesn't matter for holiday or, skiing. I just love to move. Bicycle, train, boat, plane, you name it. Hiking, canoeing, kayaking. I just love to move. And COVID, forced me to stay close. So I got into my gardening in a big way, and I love gardening. I keep bees. I've kept bees all my life. I love keeping bees. We have a bunch of hens. It's like a survival camp. Hey, I fish. It's, my nephew shoots deers on the property because there's too many of them. And so we have venison now and then, even though my wife's a vegetarian. Yeah. I've got a bunch of kids, a bunch of grandkids now. So my whole life's been evolving as I age. I really am cycling out of this mining game. Personally, it's been a great run, but you can't do it forever. And I've got to do a lot. I've got a lot of quests that I want to do. I'm kayaking around Vancouver Island right now. I'm trying to, cycle a ton, and pretty soon I won't be able to do any of that. So that's my world. It's kind of.
I mean, it sounds like a heck of a world. I'd love to go hunting with you out there anytime. I mean, you've also given millions to conservation through Sitka Foundation, other initiatives. Why is that important to you to channel your mining success into protecting the environment?
Well, it's not just mining success. I mean, mining success has resulted in tremendous amount of financial success.
Yeah.
I don't know which came first, but I do not want to die with all this money, and I've always been philanthropic. I've always felt that I've had incredible luck, and I should return that luck to some things that are important to me and my children and their children and future generations. I've always also been interested forever in the environment, in protecting the environment, in doing what I can. It sounds very incongruous as a miner to have that interest, but that's the way it is. It's not incongruous if you really get down to it, but I'm not going to bore your listeners.
I was going to say it's
all
not
my
really,
reasons for why that is.
Yeah, you guys are in the rocks all the time. There, you do like nature.
We are, and we do, and most mining leaders are also good environmentalists. They really want to protect the earth as much as they can. Mining is a very, very disruptive business, of course, but mining is short-term use of the land. It gets reclaimed by and large. Some places you can go to a mine, you wouldn't even know it was there. So you just got to do it right. And there's places that are done right and there's places that are done wrong, but I can go down that road for a long time. Environmentally, I think we need to come back to trying to protect our environment. We require healthy soil, clean air, clean water, and we're just hammering the earth just too much. And so I feel, you can do if you're philanthropic, you can be a shotgun. You can give money to every cause on the planet, small amounts. I don't really know that that's terribly useful, and it certainly doesn't focus anything. My focus is the environment. And we have a foundation. We donate to over 100 groups now in Canada, looking after protecting the environment, protecting biodiversity. I'm the chair of the BC Parks Foundation, trying to support this idea about 30% of our land protected by 2030 to make some inroads on the loss of biodiversity that we're seeing. Climate change, all about. There's a ton of things we do to support climate change. One of them was building a renewable energy company. For 10 years, I did that in Alterra Power. So I'm doing a lot of that stuff because it's important to me. And if you realize also that of all philanthropy, only about 1.5% goes to the environment. 98.4 or 98.5% goes to people things like schools and hospitals and refugees and all sorts of things that help people. That 1.5%, the environment, that's important to me because, of course, without a healthy environment, none of the other stuff is going to work long term for us. And so we need to do them both together. Have a good economy, have a healthy environment. So that's why I focus on that area.
Well said. I mean, do you think the next generation of mining leaders has a responsibility to follow your example, building companies, giving back?
I do think philanthropy is really, really important. If you're lucky enough to make money, what's the point of dying with it all? It's just crazy. And I have a very healthy, great family. They're healthy. They're on their own. I don't particularly think that, giving them, tens of millions of dollars is a very healthy thing. So it's something that I'm trying to, shovel out to different groups that support their children and their children long term. But generally speaking, I don't tell people what to give money to, ever. I mean, if people are generous, God bless them. They're going to go to heaven, guaranteed, because it doesn't matter what they give to. The idea of giving is a good thing. It builds a healthy society. It's very good for communities, and it makes us a richer country and a richer environment to live in. Yeah. So it doesn't matter what they give to. I just think they should give. If people are lucky enough to make more money than they can sensibly spend, they should pass it to others who are less fortunate.
Well said, man. Okay, well, before I let you go, I mean, you've been great getting on here with me today, but let's talk about the future of mining itself. There's that real concern that mining isn't attracting the next generation of top-tier talent, the engineers, the geologists, the financiers. Do you share that concern? I mean, what needs to change to attract the best and the brightest back into the resource sector?
Yeah, I hear that a lot, Jeremy, and I don't agree with it.
Okay.
I don't. I mean, we operate, look at Pan American right now. Pan American has, 11 mines, I think, in like 6 countries or 7 countries, 26,000 employees. I started that with, no employees. It's 26,000. Equinox, in 7 years, we now have 16,000 employees in 5 countries at our 9 operations. I think we have 8 or 9 mines. I mean, it's extraordinary. And so our head office here, you'll find 100 people in our head office with 18 different languages. And there's a lot of young people. They're smart. They maybe aren't educated in at UBC or Queen's in Canada. Maybe they're educated at the Universidad Católica in Lima or in Mexico or in New Delhi. But these are smart young people. They're interested in getting into mining, working with companies that are trying to do the right thing, trying to have healthy workers, healthy communities, good environmental practices, doing the right thing, and contributing to society by building communities and building wealth that comes from the mining industry that is spread all over the place. Yeah. So I don't really see that. I think it's true. There's a lot of older, I would say older white engineers and geologists that are tending to be retiring now. But there's a lot of other people, younger people from other countries coming in to fill the spaces, and there's good talent available.
Yeah, good to hear that. Find it. Good to hear that, Ross. All right. Hey, listen, when people look back in your career 100 years from now, what do you want the headline to say?
Ashes to ashes, dust to dust. I won't be remembered at all, and I don't care about that. It's just not important to me. The important thing is to have healthy kids, and I've got all this posse of grandkids now. Look after them and try to make them have a happy life, and try to create an environment, quite frankly, that is going to be healthy for future generations of humans. And the only way to do that is to look at the myriad of other species that we share this planet with and try to share it rather than dominate it. And that's why I do what I do. But no, I don't expect any great memory of me when I'm dead and gone. It's just going to be a passing over to new generations.
What a hell of a last question, eh, Ross? All right, Ross Beaty, of course, very humble man. That's a powerful place to leave it. Thank you for your incredible candid insight today. It's been a true masterclass. We appreciate your time.
I'm very humble with my arrogance.
Not always. We'll see if you get a 10-bagger off of some of these. We're all just watching around.
All right. Very
Thanks,
nice
Ross.
to chat.
Appreciate it. Thanks so much.
Thank you.
All right, the lesson's clear. Success isn't just about wins. It's about what you learn from the setbacks. That's the kind of wisdom we're here after on The Legends. I hope you'll still join us next time. Be sure to subscribe for all of us here at Kitco News. Thanks for watching.